There are no shortcuts to building wealth today. It takes time, effort, sacrifice, and diversification. But today, diversification means something different than it did in the past. You deserve a more secure way to protect and grow your wealth. At Delta Harbour, we take this to heart. Our mission is to help by inviting you to add physical gold and silver to your wealth strategy. Book a free consultation today and let us show you how to protect and grow your wealth through the ownership of physical gold and silver. Let us show you the Delta difference. Hey everybody, welcome once again to Hard Money. Here's Sauga 960, and if you're watching the video cast as well, just go to, if you're not, here's how you go. Here's how you find it. YouTube, of course, and search Delta Harbour Assets. You got your own subscription right there. Follow along, watch the shows, and learn plenty. The phone number, anytime, 1-888-335-8645. Delta Harbour, Harbour with a U, because this investment, this idea, and this addition to your portfolio is all about you. DeltaHarbor.com if you want to follow along, join in, and start getting into some precious metals, gold and silver, and others, which we discuss on the show. But to get us going this week, Darren, as we tape here on a Friday, it appears that both gold and silver got a lift through the end of this week and appear to be heading higher, which is excellent. Always an opportunity to get out there and get yourself some. So how was your week, pal?
Week was good, John. Steady. I mean, it's the summer doldrums, right? We talked about over the last few weeks. People are away. They're not excited right now about their wealth, and I don't blame them. This is an opportunity for many families to reconnect, people getting out to see loved ones, family, friends, sports on the go again, even in my hometown. Men's leagues, women's leagues, mixed leagues, co-ed, kids, everybody's out at the diamonds, the soccer pitches. It's nice to see. It's wonderful. And as we get through the first half of the summer break for most high school kids, the beginning of a new cycle is dawning. And generally speaking, as we had said earlier in this last month, when you get the summer doldrums in gold and silver, they tend to reach the maximum buying opportunity somewhere around end of July, early August. And then, of course, we go into a new cycle, which starts generally around mid-August to late August, and then into September as everybody returns back to school. But this week, John, yeah, for sure, it was a great week, and it's true of both gold and silver. Both represented great value over the last couple of weeks. Gold has passed, and I would say with great confidence, once again, the 1800 mark as we tape the show here on Friday. It's sitting around 1830, and silver fought back on Thursday of this week after a few bargain days below 25, and it's now trading at around 25.50. Both metals have gained back their recent short-term losses, and with gold holding the 1800 mark, this does bode well heading into next week as both metals appear to be heading higher. I suspect there's going to be some headwinds in gold around 1850, but if it breaches that area, there's a lot of momentum buying that I suspect will happen, and we could see the metal above 1900 as early as second week of August. If that happens, John, that is a sure sign as any that we're going to develop a new cycle. And of course, today's show is talking about the idea or notion of what we call commodities supercycle. So exciting to see, and certainly both metals fared well, and a big warm welcome to all of our new clients at Delta Harbour. We're glad to have you aboard. And there were a lot of questions this week, a lot of answers, and it was probably a week that I didn't expect to be quite as busy as it was.
Would you say that was in part the changes this week to the fact that the U.S. Fed, the Federal Reserve, held interest rates at the same level yet again this week?
Yeah, I do think that was a response, John. It's well noted, and certainly a good point to ponder. I do think we got a bit of a lift as the Federal Reserve in the U.S. did, in fact, keep their interest rates extremely low this week. The verbiage changed a little bit. There was some more dovish talk concerning inflation being a concern, but even with the growing concern in the U.S. of COVID variants, they still seem to be focused more so on growing the economy right now than anything else. They want to keep interest rates low, and their GDP lift was around 6.5%, but it was below expectations, even despite the fact that that's a big GDP number. And if you recall, early a number of weeks ago, we discussed a possible post-COVID rally here on the show, and have many a times citing that there's a lot of pent-up buying, there's a lot of pent-up savings, there's a lot of people wanting to move the needle forward in hopes of seeing another boom Perhaps some of that will be well placed and some of it will be misplaced. We'll talk about it throughout the show. But as we are taping this week on Friday, several markets around the world, stock markets around the world, did hit all-time highs. And it is interesting to see because, as noted, this is coming on the heels of what has been a very quiet time, lots of rebounds in different arenas, including gold and silver, if we even look from last year. But ultimately, it remains important. It remains for us, it maintains the importance that once these cycles get to a frantic phase like they seemingly are, and especially in paper, real estate, and other things that we've talked about over the last few months, we should be focused on balancing our wealth strategies and looking for assets like physical gold and silver. Not paper gold and silver, physical gold and silver. And we should be keeping a portion of your wealth outside the banking system, and that system continues to inflate, so is of grave concern for us.
1-888-335-8645, by the way, is how you reach out by phone anytime to Darren and his team. You could do so. You can just Google Delta Harbour as well, Harbor with a U, Delta Harbour Assets, and youtube.com/Delta Harbour if you want to catch all the shows on YouTube as well. All right. I mean, you mentioned the word cycles as we've discussed the investing cycles before, in fact, just last week. But this week, you want to talk about another type of cycle. You mentioned it just a moment ago as we got rolling, the commodities super cycle. Now, what is that all about before we take our first break?
Well, actually, the commodities super cycle is exactly as it sounds. It's all commodities kind of moving in one trend upwards, and you're seeing a super cycle where commodities usually do move in bull and bear markets. And as example, rising demand or an insufficient supply tend to push prices higher. So we see that happen from time to time, especially in single commodities like gold, silver, oil, food items, and animals and things of that nature. But after the initial time lag needed to add supply over time, usually that oversupply in the commodity coming to market will tame that cycle and put it back into balance. And that is the case. We've seen it many a times. More often than not, super cycles are very rare, very, very rare. And they are different. Usually they're driven by structural change across the world. And a super cycle can last a decade, maybe even longer. Commodity super cycles are really, really rare. They don't happen very frequently. However, we just experienced one from around 2000 to 2011, 12. And there have really only been 4 commodity super cycles since the 19th century. So each is during a very transitional period of time. And, there's a lot of economic development that's happening at that time. The last one that we had just from 2000, 2011, really that was characterized by and fueled by the rapid industrialization that was happening around the world, especially in the BRIC countries, Brazil, Russia, India, China, and the growth of their emerging markets, which really, really put a lot of pressure on commodities as a whole because they were all moving above their long-term trends. And that's a cycle that I think is going to repeat itself right now. And when we come back from break, we can certainly discuss more about it. But I think gold and silver are still kind of new to this notion, new to this concept of a super cycle, and they're well part of it. And I think the super cycle this time around is going to be different than what we experienced before. Usually, John, we've seen these commodity super cycles happen on the heels of hydrocarbons. So expansion requires oil, requires gasoline, got to put it in the machines to develop all of the technology to build the stuff that we're going to use, and generally speaking, raw materials to build the homes, the real estate booms, and all the stuff that goes with commodities that we've seen before. Generally, though, revolve around hydrocarbons. This is going to be the first time I believe that that's not going to be the case. And I want to tell our listeners why I believe holding gold and silver are one of the best ways to add insurance value at a time when the price is still well below what its long-term trend should be, and an opportunity for you to build your wealth. And in some cases with silver, we'll talk about it very quickly.
We'll do that and much more after a short break here. To get in touch, 1-888-335-8645, deltaharbor.com, Harbor with a U, and YouTube channel, youtube.com, of course, /Delta Harbour. And you'll find it. The assets are right there. The website's right there. And the YouTube channel as well. Watch the videos and catch his radio show every week and get started. We'll get into how you can open up a portfolio as well of hard assets for yourself after a break as well. And that's what we're going to do as we get into segment 2 of Hard Money right here on Sauga 960. All right, welcome back to Hard Money. Darren Long is here, of course, filling your head with the knowledge you need and want to expand that portfolio with hard assets in the form of gold and silver and other metals. A little later on, we're going to tell you exactly the roadmap, how to do that with your own accounts and your own portfolio. In the meantime, the phone number, anytime, keep it with you, 1-888-335-8645, deltaharbor.com. You mentioned as we got into just the last few minutes of the first segment, Darren, supercycle, commodities supercycle. Do you think we're about to begin that cycle? You said they're very rare, but do you think we're going to slide into one?
Well, I do, yes and no, and I'll say why yes and why no. But as I said in the last segment, I think it's going to be different than what we've experienced before. Typically, we've only had around 4 of these since the 19th century, and the last one really, really close to what I believe is going to be the next one. From around 2000, 2011, there was rapid industrialization in the BRIC nations, the emerging markets of the world, in China and Brazil and Russia and India. And a lot of that required raw materials. So what you saw was a boom in commodity prices. Certainly that was also something that gold and silver were no stranger to. They followed along in that same kind of thematic sense in terms of watching commodities go higher than their normal averages, long-term averages, which is what we're seeing right now. So yes, I do think we are starting to experience a super cycle of sorts, but no, not the kind we're used to seeing that typically revolve around anything related to hydrocarbons. Well, I guess the global economy is undeniably experiencing a post-COVID expansion. Many analysts remain uncertain as to whether or not this would be enough to fuel the start of a commodity supercycle, especially the way we've seen it in the past. But perhaps what we are facing is kind of what I would call an overlay of several cyclical upswings with the acceleration of a new kind of mega trend, which is the transition around the world, John, to low carbon economies. And whether we like to face it or not, it's happening. I mean, right before our eyes. It doesn't matter whether we participate in an accord or whether we're for or against carbon emission taxes and so on and so forth, but it's happening whether we like it or not. It is transpiring around the world, and the key as an investor is basically just to seek value from this. I mean, this is just another angle you can look at your wealth strategy and say, hey, how can I benefit knowing this information and find opportunity in low priced assets?
Well, and that's the question. I mean, can investors still find value in low price assets or commodities at this point?
Well, I believe they can. I certainly want to make light of the fact that many commodities have started moving ahead. Now, most people don't give commodities a second guess, John. The average listener right now is not sitting there thinking, well, what am I going to do with the copper in my portfolio or the lean hog futures I have? You know, the average person just doesn't deal in those types of investments. They might have exposure to it through paper assets, and most Canadians, if they do, aren't even going to realize it. You know, if you ask the average investor that comes to our firm, education is certainly the key with us, but in getting an investor educated, 9 times out of 10, they're not going to quite have a good understanding or grasp of what's actually in their invested dollar. So if they have a fund, they might know the name of the fund or the name of the institution where the fund is held, but they won't know what's in the fund or what the share of the different arenas that fund is invested in covers. And that's to a fault, because certainly we should be more educated about our money, less passive, because it's the number one thing we need to survive and thrive. But you know, in this day and age, already we've seen a number of commodities move forward in advance. I mean, just in year to date, and for our podcast listeners, our production team will put up the chart that's in this week's newsletter. But just to date, this year alone, if you look at things like crude oil up 51%, natural gas 59%, Brent oil, other types of oil up 45%, gasoline prices 66%, propane almost 70% higher, you know, palm oil, coffee, rice, canola, oats, wheat, beef, tea. I mean, the list goes on and on and on. And then you get to the other hard metals. You get to, hydrocarbons, you get coal, and you get then you get the metals like steel and iron ore is up 27%, coal's up 83%. I mean, how is that, right?
Wow.
If you're not in a commodity supercycle or on the verge of one, why is coal going higher in price if we're trying to convert over? Well, I can tell you, during the Trump administration, coal became a big thing again, and they went back to it in gobs, and so did many places around the world, and instead of converting to lower emission energies. But I think that if you look on the whole around the entire complex, many of those commodities have already coming and gone much, much higher just in year to date, let alone year over year or year and a half. But gold and silver this year, even though they had great years last year, silver was up over 40%, gold was up over 20%. This year to date, right now, gold is still under by about 2%. Silver still under by about 1.8%. So that's value. I mean, when you look at it, if you're looking at it from the perspective of wanting to participate and wanting to add something to your wealth, gold and silver represent undervalued assets, at least this year and year to date. And I do believe on the whole, and we'll discuss this further, that both are very, very undervalued assets outside of a commodities supercycle.
So the buying opportunity is there. Tell me a little more about that being undervalued commodities in the place of gold and silver.
Well, yes, they both are undervalued. There's no two ways about it. As you can see, there's a storm of higher commodity prices, which have hit the world economies, and it's hit it like a ton of bricks. The real threat of inflation is being felt right now, and in these commodities have something to do with that. Building supplies, gasoline, food items, clothing. Those are just a couple of examples where we are actually acknowledging around the world, most of the G20 nations, that inflation has indeed become a problem right now. In the US, it's above 5%. Here at home, they're saying between 3 and 4, but we know street inflation is probably closer to 6-7%. You're not getting wage increases, and you certainly won't be post-COVID. I mean, it doesn't matter what you say. There's just no money out there to be paying it. As employers, we've had to foot the bill for what's been a year and a half of basically hard times, and so that's very, very difficult in the face of trying to get our employees back into the workplaces to try and get more money to the table to pay higher wages. It's just not happening right yet. So we're not seeing real wage growth against this inflation, but we are seeing a boom in industrialized and emerging economies for raw materials. So post-COVID, we're getting all these low interest rates. So money's very cheap still, and you can borrow relatively cheap money all over the world. And so they're being put to use, and that means raw materials are being used. Both gold and silver, however, remain in the negative gains category on the year. And if you reread the title, you may also note that there are precious few commodities left that will represent excellent value as we approach what I think is going to be a very big possible commodity supercycle. So gold and silver make common sense to me, and on many fronts, John. In the next segment, we'll talk a little more about an article I brought this week, again from Forbes, that discusses this notion of a commodity supercycle and what their opinion is, or what the author's opinion is, on whether or not we are going to see a commodity supercycle. And lo and behold, he tends to agree with us at Delta that this could be a little bit different than what we've experienced before. But mark my word, gold and silver are going to participate. I believe they're going to go much, much higher. I think our listeners need to benefit from this. It's easy to get into the market. It's physical, tangible, hold in your hand wealth that you can put into your portfolio, registered accounts, TFSAs, buy it and take it home. I have a leverage opportunity for you here at Delta if you're an aggressive investor and want to know more about that. But do your due diligence. This is the time to own undervalued hard assets like gold and silver to balance your wealth and have a really, really well diversified wealth strategy moving forward.
And we will discuss exactly how to do that and get your portfolio happening with Delta Harbour for sure. But first, we got to take a short break here. 1-888-335-8645. DeltaHarbor.com is how you make that phone call. Reach out online and start doing your due diligence as well and getting educated with Darren and the rest of the team. We'll continue. This is Hard Money on Sauga 960. All right, welcome back. Hard Money. John Scholes here, along with Darren Long, every week educating you on hard assets and how to expand your portfolio, gold and silver, other precious metals. It is really just a phone call away to get educated and expand your portfolio horizons and learn more, right? Maybe you've never gone down this road before. It would be a place that you have not ventured and should be soon. For sure. 1-888-335-8645, deltaharbor.com online. That's Harbor with a U because, first of all, we're Canadian, but it is all about you, this investment of hard assets. Okay, Darren, just before the break, you talked about a very trustworthy source. That would be Forbes. An article came out coincidentally, what you've been talking about all show, and that is the commodities supercycle. So what exactly did this article say?
Well, it's on Forbes, and it's by an author named Simon Morris of Wood Mackenzie. He's the head of metals trading there. Certainly, there is a degree of bias, no doubt. I certainly would not hide behind that, but this article essentially is talking about a supercycle like no other. And what it essentially says is that they kind of agree with us that this supercycle will not be based on hydrocarbons. In fact, they believe it is going to focus around the energy transition that we're currently witnessing: solar, wind, EV technology, all of the different trends that we're seeing develop around the world. And the electric car is probably one of the biggest and most popular right now with solar. And, many parts and places around the world have already committed to it. We believe that this is part of the reason why you're seeing this growth in raw materials and commodities to some extent. So as this transition develops, this article is talking about some things that are going to be putting pressure on raw materials like gold and silver. And I'll quote from the article. It says, "Is there going to be a supercycle? We think so, but I'm pretty sure it will be different from any others we've seen before. First off, this will be the first commodity supercycle in history where hydrocarbons aren't fueling the boom. That's not to say that oil, gas, and coal won't play an important role in the energy mix. The global economy will rely on them for years to come. Instead, this time it will be the metals critical to the energy transition that will electrify the markets." End quote. So when you look at it and we break it down very simply, we talk about those big trends. And again, if you're an astute investor listening to this show, you're looking to develop your wealth strategy, or you're just an average everyday buyer of stocks, mutual funds, and you want to add some value to your portfolio, think of things like solar. Solar equals silver. Every single solar panel that gets created around the world requires silver in it. Silver, the best reflector of light known to man. And so, again, it is certainly something that we are seeing right now that is growing, certainly outside of Canada, that's for sure. I have a number of colleagues, very close colleagues, that once upon a time, a few years back, looked into developing solar technology and being part of that rush to solar. And I, as an investor, potentially looked into buying into the company. And ultimately, we thought we might be a bit early. So certain that's something on the table right now. But other parts around the world, I mean, if you look at places like India and parts of China, all kinds of European countries using solar technology. I go up to my cottage on a regular basis, and what do I see? More than ever, rooftops full of solar panels, solar arrays parked right beside the cottage, buried in the woods, that are not harmful to the surroundings. They don't draw too much attention, but if you know what you're looking for, you see them. Those all have silver in them. So again, that brings demand. And as that in Western culture here, which is happening down places like California, Florida more so, but when it happens here, we're going to see big jump in demand for things like silver. Electric cars, as we said before, John, amazing to see the demand growth in electric cars. I mean, it's just, I don't even know how we're going to live in the next 20 years without them, because the cost of oil is going to get so high. I think right now what gas is doing, we're not even saying peep. So of course, moving to electric vehicles is going to be a thing that a lot of people do. And obviously we think it's going to happen sooner rather than later. In addition to that, in electric cars, silver and gold get used, and silver predominantly. And it's a very big part of the batteries in the car and the technology in the car. Gold as well in the technology also. If you look at wind, requires silver in all of the windmills. The machinery to produce new technology, that means the usage of silver and gold. They get used as catalysts, and they get used in bearings. They get used in switches. They use in all kinds of stuff that revolve around electrical things. So keeping a hedge as the cycle develops, this super cycle potentially develops, and many countries come close to faltering, means you might want to keep gold and silver in your portfolio. I love the idea. I think that to a great extent for the last 5-6 years, Part of the reason I've been buying and accumulating more gold and silver personally is because I believe that they are not only hedges in the normal world, but I do see this whole transition developing. So I'm loving what I'm seeing in metals like gold and silver. They just go along for the ride. It's an overwhelming change in the way the world uses energy. And if you saw from 2000 to 2008 in the growth of those BRIC countries in particular, that thirst for raw material dragged gold and silver along with it. Silver went from $4 and a nothing metal all the way up to $21 an ounce by 2008, and then by 2011 up to $49 an ounce. Gold went from a nothing metal on nobody's radar at $250 all the way up to $1,900 an ounce, and still holds close to that value today. So I think that that's going to happen, John. I think we're going to see it. And like what happened in 2000, 2008 in the BRIC countries, we're going to experience that now all over the world.
So what are the options for people to hold gold and silver at Delta? Because that's what, people really want to know, right?
Well, sure, of course. If you do like the idea of having gold and silver, and you should, they are wealth preservation assets. They do offer some insurance. They can be a hedge. They certainly are used by central banks around the world, gold in particular. But if you want to buy from Delta Harbour, you can keep it simple. You can just give us a call, ask for a price, set up an account, fund your account, and take your metal home with you. You want to buy 100 ounces of silver, 1,000 ounces of silver, maybe 10 ounces of gold, whatever it is you want to buy. We'll talk about the bar types, the coin types, and the offerings. We don't offer numismatics or collectibles. Those are marked up items. We stay away from those. We offer the pure physical bars and only the coins that are considered investment grade. And so that's an option for you. If you want to store your product, you can definitely open up a storage account, buy your metal again by opening up that account and funding it. And then, of course, your metals are going to be in storage for you to visit at your leisure, for you to make changes to. Keeps your liquidity higher. You can buy and sell by phone call. There's also the option of putting in your registered account. Most people don't realize, John, you can take physical bars of gold and silver, put them into your TFSA, your RSP, your RESP, your LIRAs, your pension plans. You can put gold and silver into most of those. And the good news is, if you've already got that account set up somewhere else, you can bring that over to Delta and we'll get gold and silver into it for you using the money that's already in your investment account elsewhere at another institution. So that there is an option as well. We have bulk bullion. So if you want your product out of sight, out of mind, you don't want to pay a slightly higher premium for bars or coins or take it home, we have a bulk bullion option where we put metal into the vault. It gets audited and checked on a monthly basis so that you can be assured that it's there in physical form. And we just keep adding to the pile over time, and people just buy their ounce of silver or gold. And instead of paying those high premiums for a specific type of bar, they just own that ounce out of the pile of ounces that we put into there. It's their ounce. It gets accounted for to them. In particular, it's allocated for them and segregated to them. Or you can take that account and you can leverage it. If you want to do a little bit of collateral financing, that's an option for you too. And maybe, John, when we come back, we'll talk a little bit more about that collateral financing option.
Again, all speaks to the education of getting this portfolio open for yourself and friends and family members for that matter. Reach out to Darren or Rob or Roy, get it happening, get educated, and start this end of your investment portfolio with hard assets like gold and silver. 1-888-335-8645. That's the number. And deltaharbor.com online to reach out and learn more as well. We'll continue. This is Hard Money on Sauga 960. Hey, welcome back to Hard Money, Sauga 960, and online, the YouTube channel. That's where you are, youtube.com/Delta Harbour. And you can follow along the visual portion of this broadcast every week. But if it's on radio, make that phone call. Simple, 1-888-335-8645. And deltaharbor.com. So transition is upon us. We talked about it. And then your belief, Darren, is that hard assets like gold and silver will be part of the supercycling commodities, which we've been talking about since the start of this show. Expand on that for me.
Well, that's correct, John. The market is coming to the realization that despite the uncertainty arising by the mix of different tools needed in order to meet things like the Paris Agreement and the UN Sustainable Development Goals, the SDGs, there's a lot of opportunities for organizations that will help the economy decarbonize. And again, it doesn't matter whether we agree or disagree, whether we hate paying a carbon tax or not. It's happening. I mean, the world is going to a decarbonized state over the next 15 to 20 years. We are going to decrease our dependency on oil and other hydrocarbons, and the transition to a low carbon economy, it will last for decades. So opportunity as an investor, a wealth strategy that encompasses this, that holds on to this, is yet another reason why we encourage investors to at least do their due diligence and seek the advice of those that they trust to add quality hard assets like gold and silver. If this does last for decades, John, like we think it's possible, it might. Its impact on commodities will not be homogenous. Different commodities will be impacted in different ways, as different raw materials have varied exposure to climate risk and transition risk. And as an example, you can look at energies and metals. They're increasingly interconnected and have become so over the last decade or so. And the switch to low carbon energy is already providing, it's a fairly significant boost to the metals and minerals, which are needed to basically build renewable energy infrastructure and produce, the batteries that support the electrification of the economy and the expansion of things like EVs and EV fleets. So ultimately, yeah, that's a big thing that's happening right now. And that transition is right before us. And again, a very, very simple thing to see ahead of the curve, looking for value. Earlier in the show, we talked about many commodities going much higher in price year to date already, giving us a sure as heck sign or a warning, if you will, that this is what is transpiring. And post-COVID, with a little bit of an economic boom, this could catch on like wildfire. We could move much, much higher.
So, looking at both gold and silver now, do you believe both metals offer substantial value, are low priced, and represent must haves?
I think they do. I think that they do offer substantial value in the sense that gold is around 1,830 an ounce. There are just as many advocates for gold as there are for silver, but many people will tell you that gold is very undervalued and should have been closer to 3 to 3,500 right now in price. And there are many reasons for that. We looked at the 4 fundamental reasons for ownership last week in depreciating currencies around the world, the threats of inflation, geopolitics, supply demand. Those are reasons why gold should go much higher. And it has. It's experienced a very nice boom. It's averaged about 9 to 10% since about 2004 per year in terms of gains. Some years have been much, much higher than that. And there's only been one losing year in that entire span. So it's done its job. Silver's had a couple of down years, but also it has averaged, well, it sits at $25.50 on paper. It has also averaged around 9 to 10% per year. So it has represented a good, steady, consistent return year over year. And that is the cumulative effect of gold and silver. We certainly don't advocate buying and selling silver like a day trader or anything like that. It's a long-term hold, and you can and will see buying opportunities and selling opportunities along that path. But they are very undervalued, and they're useful in any transition. Gold more so, I think, because of its hedge and insurance properties in a wealth strategy, and because you see central banks around the world holding it. I mean, why would they? It's an insurance policy. They hold it because they're fearful that if ever there was a disruption in fiat currencies or a country that came to some situation similar to what we saw in 2008 and 9, that they want to have an asset that backs their paper investments. So they use gold for that. Silver more so because of its industrialized usages. It's required to be used in almost everything that we touch, all the technology we develop, which is going to be part of this energy transition. And this consumption is going to go on and on and on. So I definitely think both gold and silver are, in fact, undervalued and represent great value right now.
The number, by the way, as we move on here, 1-888-335-8645 to reach out to Darren and his team and have that conversation. As long as I've known you, you've always touted and recommended, as far as gold and silver are concerned, these two assets in physical form versus paper or a fund or anything like that. Why do you do that?
Well, first off, just from a layman perspective, don't we have enough paper already? I mean, pretty much everything in our life that we own that's part of our wealth strategy outside of our house, and maybe if you own a car, an extra car, but everything is on paper. I mean, paper scares the living daylights out of me. It's not like it used to be, right? It's not like we used to hold a couple $100 in our pocket and we were Jack the Lad. Now we hold plastic and we spend somebody else's money like it's going out of style. But how many times do you spend that money on an investment? You're using it to buy groceries, to pay bills, to take cash advances. And ultimately, I think as Canadians, we have enough paper assets. We're well supplied in the paper asset arena. So when I look at gold and silver, that's just a layman's perspective. And in terms of what I think they are beyond that, they're durable, right? These are assets that are physical, that you can hold, tangible assets in your hand that can be used for any number of things, let alone as a wealth strategy. They have a dual purpose because obviously, as we've been talking about, they go higher in value during certain periods of times, and we expect that to be the course that they'll undertake over the next 5-10 years. We think both will go much higher, so that's there too as well. But you can buy and sell them, but also take them home and keep them as insurance. I mean, you can pass them on to the next generation. If you have the ability to own gold, maybe you might want to have 40, 50 ounces of gold in your portfolio. But then again, you might want to pass 10 or 20 of that on to the children. And I mean, that's a great way for them to have something that's tangible, to build wealth, to have an insurance policy, something to rely on, fall back on. But again, that's something that you can do with gold and silver. Can't really do that with paper assets. I mean, company goes out of business, paper asset goes to heck. So I mean, it's not there anymore. They tend not to move also physical gold and silver in the exact same direction as paper. In 2008, when the world fell apart and we had that financial crisis, paper assets fell off the table. I mean, like no tomorrow. And along with the rhetoric of all the financial planners and advisors of the world telling you to hold on, gold and silver did dip. But over the next 36 months, nothing came close to touching them. In the grand scheme of things, gold and silver, gold went from $650 an ounce in 36 months to $1,900 an ounce. Silver went from $8.50 to $50 an ounce. So, I mean, ultimately, they rode that wave very comfortably. And again, there are no third-party liabilities when you're holding gold and silver. You've got no problem with that. So they are not going to represent any type of threat. You can't print them. They are easily transportable. They are liquid assets. Paper is not a liquid asset like gold and silver, in my opinion. Some people may differ, but when the stock market closes at 3:30 in the afternoon, 4 o'clock in the afternoon, or your bank closes at 5, you can't buy or sell that stock typically, right? If the stock market's closed, you can't buy and sell that fund. You can't do any of it. With gold and silver, those are assets that trade 24 hours a day from Sunday night to Friday night. There are always instances where if you're set up the right way, own it the right way through a company like Delta, you can buy and sell it 24 hours a day.
Whetting your appetite, piquing your interest. So I'm sure we've done that over the course of the last 40 minutes or so. So you want to carry on at least as we get into break here. Here's the number you want to keep with you and write down and call 1-888-335-8645, deltaharbor.com. We're going to say and ask, as we do quite often, why Delta? Darren, why Delta? But we're going to do that after a short break, which we're going to take right now and come back with more Hard Money right here on Sauga 960. Welcome back to Hard Money. Darren Long is here once again this week. Delta Harbour is where you want to go, deltaharbor.com, a YouTube channel as well. Phone call 1-888-335-8645, because sometimes it's nice just to pick up a phone and have a conversation, get educated, and clear your head as far as this avenue of your hard assets in your portfolio, which you may not have and don't know too much about, but you want to educate, right? Before you dip in, you want to dive in and get some education as far as that's concerned. But I always ask you, every couple of weeks I ask you, Darren, now that you've gone through why holding physical metals is the way to go. I think we beat that one, and we're going to continue telling people exactly that. Why Delta, though? Why Delta?
Well, John, it's something we talk about every week because I feel very strongly, as does our team, our entire team, about customer service and relating to the clients. And I think in this day and age, it's the number one thing that's missing. Case in point, yesterday in the office, we had a representative come by, Uline representative, to discuss at a socially distanced, comfortable space his product and its office supply product, boxes, storage, office chairs, supplies, tapes, pens, everything. And the funny thing was that they are the same way as us. And they talked about how important customer service was. But the salesperson that discussed this with us basically said, look, at the end of the day, we recognize that you may be able to acquire some of these things less expensive somewhere else. That's usually not the case with Delta, but from time to time it happens. However, when you package in the idea that somebody's there 24 hours a day, they have customer service 24 hours a day, 7 days a week. You call the phone, they have a one ring guarantee. If somebody doesn't pick up that phone after one ring, they feel they failed or let you down. We feel the same way. So when we talk about relying on that experience, there's something that is important, and I use it in every single email. I thought I'd bring it with me today, John, because I want people to understand that there is definitely a priority at Delta to connect with the client, support them, hold their hand through the whole process. And it comes in the form of a quote. It's from Mahatma Gandhi, the famous Gandhi. And his quote is simple. It says, "A customer is the most important visitor on our premises. They are not dependent on us. We are dependent on them. They are not an interruption of our work. They are the purpose of it. They are not outsiders of our business. They are part of it. We are not doing them a favor by serving them. They are doing us a favor by giving us the opportunity to do so." And that really summarizes how we feel at Delta. And I think most of our clients would agree. We put 2 account representatives on every single account. You have access to members only content. You have access to members only product specials. You have telephone and live chat support. You have Zoom support. So we can have a Zoom conference anytime you need. You have a referral program that you can easily access. So if you are a person who has access to family and friends, you're a decision maker, you're a planner and advisor, if you're in insurance, if you're somebody who speaks for a small group of investors, let's set up a Zoom conference and talk about our referral program. At least let's get excited about the opportunity. And even if you rule it out, we'll part as friends. It's that simple. We'll just keep it really, really simple, easy flowing, and no twisting of the arms. We have timely updates on everything that we do and work for bringing to our client base. We have free one-on-one phone consultations for new clients that have no obligation whatsoever. We're there exclusively, and every member of our team has been instructed to be there just to answer questions. If somebody wants to move forward, sure, no problem. And there are no additional management fees, John. Unlike when you're holding mutual funds and you get that, well, if you're lucky, you get one call a year, but probably not. You're paying for it no matter what. So that management that hopefully is making you money, in some cases it is for sure. You want to get a phone call every now and then. We do this all the time with our clients. It's very simple. It's not hard to do. And we want them to know that we'll be there for them. In this day and age we've talked about today, when you've got super cycles happening, you've got the post-COVID boom that we suggested was going to occur far before this started happening. You've got the release of money into the economy. You've got a lot of options if you're some investors with disposable income. We think gold and silver should be a strong part of your portfolio, and we think that it should be one that is emphasized by the ownership of physical bars of gold and silver, which Delta is always happy to help you with.
Yeah, you guys always hammer home the point of education and learning before you take the leap. And it's like a friend of ours who's also in the financial industry once told me, says, you be a learn-it-all, not a know-it-all. And that's really the angle you guys come at. It's just teach people about the hard assets, and then it's almost a go-to position to open up that end of your portfolio. But I want to go through again just before we finish off for the day. What are some of the options for people to hold gold and silver at Delta? Again, physical gold and silver.
Physical gold and silver at Delta, it's all we do. It's all we handle. You can buy it and take it home. It's a very simple process. Open up your account, fund your account, buy your metals, take it home. There is bar and coin options in both gold and silver. They're on our website, and we can make that connection simply by addressing an initial consultation option and perhaps spending a few minutes on the phone discussing what it is you want to buy. If you're a seasoned buyer, a stacker, as they're called in the gold and silver industry, then we have options for you too. I think you'll be very pleased when you look at our pricing comparative in comparative manner to most of the big companies in Canada. That is certainly something that we pride ourselves on as well. We talked again earlier about the idea of putting gold and silver into your registered accounts. Do it in the TFSA. Keep it capital gains free. Bars and coins in your RRSP, in your spousal RSP, in locked in accounts. We can move them from your existing institution, bring them over to Delta, put gold and silver in them, and give you all of that option to be able to buy and sell, go online, portal, log in, and see all of your holdings. And in addition to that, as we said, the idea of bulk bullion. If you're not carried away with, if you're not interested in holding your bullion, if you don't really want to pay slightly higher premiums for a specific 100-ounce bar of silver from the Royal Canadian Mint, or you just want pure exposure to physical silver and gold, we have the option of bulk bullion, which keeps the cost way lower. It's still physical. It's still audited product. It's put into the vaults. You can visit that product, and it's tangible. Buying and selling happens by phone call, and you can use it. If you want, you can use the financing, use that position in bulk bullion to finance up to 80% of the value of that metal you bought, in addition to what that original purchase was. So if you're looking to buy $100,000 worth of silver, you can look forward to putting down less than 30% in total, including the cost of doing business for owning those bars, into your account, and have complete control. You benefit from the gains in that market. Silver goes up $4 or $5. You've doubled your money on an investment like that. If that's the type of investment you're looking for, please give us a call at Delta. We'd be delighted to speak to you, give you all of this great customer service, and welcome you to the gold and silver market.
Man, great stuff for another week, Darren. Appreciate that. And you want to get a hold of Darren or Rob or Roy, you can do so now that we're done for another week. Reaching out, as mentioned, the phone number all the way through the show, 1-888-335-8645, online, deltaharbor.com. And to watch these podcasts, videocasts anyway, and go back to see some past ones, youtube.com/Delta Harbor. That's Harbor with a U, because this investment, of course, is all about you. We'll catch you next week. Hard money right here on Sauga 960.